because I know we were talking about Sacramento a little while ago, and it's uploading right now. But now we're going to talk about Washington D.C. and what happened in Washington D.C. with what, over 12,000? Would you think it was that much?
That sounds about right. But
About
first,
12,000 realtors.
First, we have to do a disclaimer that what we say today does not represent Tri-Counties Association of Realtors
or the California Association of Realtors
or the National Association of Realtors.
This is all Mary and my opinion about what we're doing to help consumers.
And you, if you're a real estate agent.
Yes, of course, and you if you're a real estate agent. Because if you're thinking about being a realtor or you're thinking about working in the real estate industry, I'm having a problem talking today, you really need to keep up to date on what's happening, not just with your local association, but with your national association. And we're here to talk about what we're seeing happening with, I know Mary's going to say these words, lawsuit.
Okay, we're going to give you some background, okay, so that you can have an appreciation of what's going on. So for those of you who are not familiar with the lawsuit, there's a lawsuit that took place in Missouri, in Kansas, Missouri. Now, keep in mind, we do business in California, and we all make the mistake of thinking that everybody does business the same way that we do, and they don't. And unfortunately, something took place that caused a lawsuit, and that lawsuit turned into a class action lawsuit, and it was against the National Association of Realtors, which includes all of us. So that being said, the jury consisted of 8 people. 4 of them had never owned property. 2 of them had sold their home for sale by owner, and 2 of them had used a real estate agent.
So out of our 8 jurors, because they don't have 12 in federal court, they had 8.
It was an antitrust lawsuit.
2 of them had used realtors. Okay, and then the paperwork that the jurors had to sign, the questionnaire.
Well, we're jumping ahead.
Okay.
So then the judge ruled that the case was going to go as per se. And you're going to have
Which is the worst thing ever. Look up a lawsuit by per se.
And you'll find out what it means.
And you will never want to do it.
What ended up happening is that there was evidence and documentation that we could not present. NAR could not present.
So how they explained it in front of everybody was, if your judge decides to go per se versus evidence, right? You are not allowed to come back and show your evidence. So we did not get a chance to defend ourselves.
Well, that's simplifying it, and that's probably not
the easiest way to explain
it.
Yeah.
But it's the easiest way for us. And remember, this is just our opinion.
And we're not attorneys. Okay? We are realtors.
So the jury came back with a verdict in less than 1 hour, and they found the defendants, and that was the National Association of Realtors and a few other companies. They found us guilty. It was at that point that the jury asked for the financials of NAR. Now remember, NAR is an association that consists of all the realtors in the country, including Guam and Puerto Rico.
So that's over 1.5 million of us.
Well, 1.5, 1.4 million, because of the current environment, it's adjusting a little bit. So that's a lot of people. But what they provide for us is a constant source of education, information, update. They guide us, help us. We advocate for consumer property
They make sure
rights.
all our forms are correct so people don't sue each other.
Correct.
We protect the sellers. We protect the buyers.
So that being said, as big as we are, that costs a great deal of money to run and take care of. But going back to the jury, they wanted to see our financials, and based on the financials, they arrived at this astronomical judgment.
Which, if you saw it on the news, it was over 1.5 billion with a B, and it could be what, Mary? Trebled, which means times 3.
And so that being said, we're going to give you the short version because,
there's a lot of wrong information out there.
Approaching appeals, approaching to have the verdict set aside, all that good stuff, all that legal stuff. We're not attorneys. Bottom line was that we finally arrived at a settlement of $418 million. It has been okayed, but it has not been approved. So it's still out there. But based on that approval, things are going to change. And what the lawsuit was all about was that the seller has been paying the buyer's agent's commission, and they felt that that was wrong.
Okay, but this has been going on for how many years, Mary?
Well,
How
real
long
estate
has sellers been
started
paying?
in the early 1900s. And the thing is, I can't speak for other states. I can only speak for the state of California. But we have a code of ethics, which is everybody follows and adheres
And
to.
if you don't follow the code of ethics, we have the grievance committee, correct?
Correct, and the professional standards committee. You can get your hand slapped. We can turn you over
Or
to
you
the
could have a
Department of
fine.
Real Estate. We can fine you. We can literally kick you out. But our code of ethics and the way that we do business is that it has always been negotiated. It's the compensation that is paid by the seller has always been negotiated.
But it was negotiated by the seller's agent, correct?
It was negotiated by the seller and the seller's agent.
Correct.
The listing agent. And so what happened is in this lawsuit, they're saying, well, wait a minute. Why am I paying the buyer's agent to negotiate against me? Folks, again, this is just my opinion. It's business. It's like I'm looking at Mr. Seller and I'm telling Mr. Seller, I'm going to list your property. And to list your property, I'm looking at this much money. The seller comes back, well, can we do it for this much? And then you look at it and you think about it, sure, that's agreeable, that's a fair amount. And you arrive at a figure. Sometimes the seller will come back and say, I'm only willing to pay this much. You can either agree or you can say, my work is worth more. Sometimes you can agree to a little more, and sometimes you just say, you know what?
But it's definitely
really
not
like
a
you.
fixed amount.
It's no.
I mean, because we also have
Wait
people
for
like Help You Sell. We had, I mean, many companies, but the one problem that I remember in the court case, we won't say names of companies, but there was one company that in their
training video.
in their training video, it told them that they had to ask for a certain amount.
Correct.
And that's the thing that nailed the coffin, saying that we were antitrust.
Well, it didn't help.
It didn't help at all.
It wasn't the
but we
nail,
don't do that. And
but
if
it
you've
didn't
ever
help.
worked with a realtor,
Okay, now
Yeah.
getting back to the thing is that it's negotiable.
it's
And
always
you
been
can-
negotiable.
And you can decide. But what a lot of people misunderstand is that they think that all we do is put a for sale sign out in front of the yard, in the front yard, and that's it. We're done.
The house
No,
sells.
that's not it, and that's not done. What we do for the seller, we protect them. We make sure that they understand the exposure and the liability that they're undertaking when they're selling their house. You have to disclose everything. If you know that there's something wrong, you have to disclose it. You can't sit there and keep your fingers crossed and hope, oh gosh, maybe they won't find out and I can get away with it.
The sink in the master bedroom doesn't work.
Or that you've got a leak in the roof, but it's sunny outside, it hasn't rained. Those are things that you have to disclose. Otherwise, the buyer can come back and sue you for misrepresentation, for fraud, for damages, you name it. And the last thing you want, because the attorneys cost more than the repairs do.
Absolutely.
So, all of that being said, we have a $418 million lawsuit, and part of the agreement of the lawsuit is that the buyer and the consumer is the one who's it's going to impact and affect the most.
It's really going to
But
hurt
now-
the low income buyers.
Correct, because it's going to have an effect on affordability. But now the buyers are required to pay the buyer's agent's compensation. Now keep in mind, some people say you have some companies that I'm not going to name who feel that it's not necessary for the buyers to have an agent to represent them. They feel that all you have to do is take the buyer straight to the seller's agent, because who knows more about the property than the seller's agent. But folks, if you think that, Big mistake.
Let me give you a horror story. And I know that, we talk about, we don't want to throw any other agents under the bus because, I mean, we're all realtors. But you have to understand that in every business, not just real estate agents, every line of work, attorneys, doctors, there's always some bad player somewhere. And, when they keep telling us about how they don't need buyer's agents, and, all I can say is I can talk about one of my clients, and, we sat down and we did some disclosures yesterday, and she had an agent that obviously wasn't following the code of ethics or anything to that matter. She represented a bank owned property, and she didn't have a buyer's agent. And unfortunately, she didn't get her last walkthrough between the time she closed escrow. So when you guys close escrow, prior to signing your loan docs, right at the very end, you should go back and inspect your property. And your agent should ask you, when do you want to see your final inspection? And she didn't get her final inspection. She didn't even get a first inspection, by the way, Mary. And her agent didn't tell her that she should have a home inspection. And she got her keys after she signed her loan documents. And she went to her home, and there was somebody living in it. And that person living in it wasn't supposed to be there. And he was tearing the cabinets off of the kitchen cabinets, and using them for firewood. And the agent who was the listing agent, first of all, should have gave her the property in the condition she saw it last. So when you buy a home, you should have a home inspection, and you should say, okay, wait, when I came to this house, the pool was blue and the grass was green. But now the grass is brown and the pool is green, and I need to have it the way it was the last time I saw it because it's supposed to be the way it was when we purchased it. And and I told her I was sitting there doing disclosures with her, Mary, and you know how many disclosures there are. Selling your house by yourself is a scary thing if you're not an agent and you don't know the disclosures. And I sat there with her, and she looked at me and she said, when I bought my house, there wasn't this many disclosures. And I said, there should have been the same or more. And she said, no, my agent didn't go over anything with me. And she's one of the people who got the short end of the stick because she didn't have an agent representing her. She was using she found the property on an REO website, and it was the seller's agent. So we're looking at a world where this might happen to buyers all the time.
Well, we're working in earnest to make sure that the buyer has the opportunity to have representation. And we understand in our world, there's a major issue of affordability in the state of California. We understand that a lot of times, especially your first-time home buyers, are getting gifts from mom and dad, from the in-laws, the uncles, gifts to help them with down payment, to help them with closing costs. And sometimes they're even writing up offers asking sellers to help with closing costs, which is called concessions. And sometimes the sellers will do it. It just depends on the kind of market that we're in. And currently right now in the state of California, because there's a lack of inventory, you have multiple offers on each property. So concessions are, sometimes the sellers will do it, but not as easily when you don't have as many buyers. So it all depends. It's a selling technique.
So one of the main reasons we went to Washington is because there were federal laws and rules and regulations that we wanted to make sure that our congressmen, our U.S. senators knew that, this is something that can hurt the consumer. And, again, we don't want to be political because the Realtor Party, we actually have the Realtor Party, and we are purple. We wear purple all the time.
It's okay to be political. We don't want to be...
Yeah, it's okay to be political, but we're here. We're not red and we're not blue. We're purple. And I hate to bring something up because we're trying not to be political, but one of the things that's just, talking about this lawsuit and what's happening to the homeowners, we are in an election year, and our president is saying homes for Americans. He's like, he's behind Home for Americans. Well, we should be writing to our president, our Congress people, our U.S. senators, because if you want to help people with the American dream that's about to fizzle out and die, people who have sold their home, who've already owned a home, those are, move up buyers. Those people will have the money if they really want a home to pay for their buyer's agent. But the first time home buyers who have the dream of being a homeowner, they're going to have to come up with their closing costs, their down payment, and now they're realtors commission. And we've never had to do that before. And that's one of the things we were trying to show. One of the things we were trying to show the senators and the Congress people were veterans. You know, one of the things we went for veterans. Tell me what's happening with veterans, Mary.
If you're a veteran and you're going to purchase with a VA loan, they're not allowed to pay it. And we didn't want to see the veterans be hurt and lose the opportunity of having representation to protect them. Because folks, when you're not just signing a lot of paperwork and a lot of documentation that somebody needs to go through it with you so that you understand, because this is probably the largest purchase you're ever going to make in your
The
life.
biggest investment in your
There's
life.
also other things to keep in mind. It's like to do those property inspections. That's the cheapest insurance that you can get to find out if a house is okay or not, because it can look really pretty. We have this phrase about putting lipstick on a pig because they slapped on some paint and they painted it, but oh gosh, the foundation isn't correct, the
Plumbing's not
good,
working.
the electrical's not working right, or the fuse box is in backwards. Sometimes they're minor that can be fixed and we can ask the seller to address it and fix it. And sometimes they're major where it cannot be fixed.
Your agent's
and you
there
need
to advocate for you.
So this is where your agent comes in and says, look, you see all these cracks? Oh, gee, look, we're in the bedroom. I've got this ball in my purse. Funny thing. Let's see. And you put it on the floor and it takes off rolling downhill because the floor is not level, which means there is a foundation issue. A lot of things. But the agent helps you so that you have that ability to be able to negotiate or to walk away from the property.
So you have a professional looking out for you.
Correct.
Right.
Okay, so we pointed out to them that because of the way the VA loan is structured, a veteran is losing that opportunity of representation. So we were successful, and it's temporary, but VA has said that the veteran can pay for his representation. And so part of that representation, because is what we just talked about. I don't want to zero in too much on the compensation part, because my feelings are, again, this is just my opinion, is this lawsuit, we understand why it came about. We don't necessarily agree with it, but this is just us, and I feel strongly that the consumer is the one who's going to be paying for it the most, not the realtors.
Well, it just makes it so much harder for someone to purchase a home or even think about purchasing a home. And one of the things we talked about is when we were in Washington, D.C., one of the companies had a big, huge bulletin board, and it had, 100 and something? It's like 131 things that a buyer's agent does for you. And the numbers, they go up and down, but it's over 130 items that the buyer's agent does for the buyer. And again, over, I don't know how many things, I thought it was 170 things that a seller's agent does for a seller. And, we don't, like Mary said, we don't just put a sign in the yard and hope the house is going to sell. I mean, it's all about helping your client and advocating for them.
Well, in this current environment right now, if we're going to take a buyer shopping for a property, first thing we have to do is make sure that you're qualified. And sometimes people work in strange, funny kind of jobs, and they've been to other lenders or other realtors who have told them, nope, sorry, can't be helped. Well, if you go to somebody who's experienced and somebody who is informed and involved, they get exposed to all these various programs that are available to help you get in. FHA has a program where it's an FHA loan with down payment assistance. You have VA for veterans, it's 100% with no down payment. 100% financing with no down payment. Things like that. And like we said before, the inspection. From the minute that we start driving, we're not just driving you around looking at properties. We're advocating for you and we're representing you. Sharon and I can sit here and we could spend the whole time talking to you about stories. I have a seller welcomed me into her home and say, and I was supposed to list it, and gee, Mary, I got this letter from the franchise tax board, And when I looked at it, it said she owed $75,000 in
Oh
taxes.
God.
So I said, well, the Franchise Tax Board, they're good. They'll work with you. Let's give them a call. So with her authorization, I was able to speak with them. We went through it. Long story short, it was pretty involved. And I started working with her. She authorized me to do it. It took me a whole year, but we got that
Wow.
$75,000 reduced to $338. And it wasn't just a question of making phone calls. I literally had to build a file. And fortunately or unfortunately, my seller wasn't the type that kept very good records. I started out with a K1 that was halfway chewed off, and I went from
Halfway.
there. So these are some of the things that we do.
But
And
this is
most
why
of
you want
us
to work
are
with a
like that.
realtor who is involved with the laws, knows what's happening, knows the changing programs.
Well, and we know who to go to.
Yes.
Because we weren't just, the attorneys that I had to call, the tax preparers that I had to call, and the franchise tax board that I was speaking to. And the fact that it took a year, but we got, and by the time that year was up, it was up to $78,000, but we got it reduced down to $338, and we were able to proceed with the transaction. And there's a lot more stories that are like
Mary and
that
I
that
could
we
tell
do.
stories forever because Mary's been doing. When did you get your license?
1983.
She got her license in '83, which is funny because I got mine in '84.
That big R was posted on my diaper.
And it wasn't on mine because originally I just did loans, and I still do loans, and Mary does loans. And you want to work with somebody, I don't know why they don't make it more mandatory for real estate agents to learn the loan process. I'm going to be having a class called Understanding the Mortgage Process. I've already done the class several times. There it is. I think we're going to unfreeze. Yeah, there we are. We froze for a second. So having somebody that knows how to understand your income and know if you can actually buy the home that you're looking at, I got to tell you, I get new agents under me every so often because I'm a broker. And I had one young lady, this is a really good story because she got her license and she put it under me and I was coaching her. And I said, what I want you to do, I told her what I wanted her to do to build some business. And she did what I told her. And she had 3 people that came back to her and said they were interested in buying. And she said, in fact, one of my friends has been looking for over a year. And I said, do you know why she's been looking for a year? And she says, no. And so we set up a Zoom meeting. And the first thing I said to her is, I said, I understand you've been looking for a home for a year. So tell me what you're qualified for. Mary, do you believe that she didn't know what she was qualified for?
Yeah, I do.
She had no idea. She said, well, we're looking at homes between 400,000 and 500,000. And so I talked to her about her numbers. I talked to her about what's going on while she was looking. And she went through a pregnancy and a miscarriage. But at the end of the day, she didn't qualify for what she was looking for. And so she spent all that time. And it wasn't her wasting the realtor's time. It was the realtor wasting her time. So you really want to work with somebody who's professional. But going back to Washington, D.C., we fought for a lot of things. We fought for the veterans, right? And the other thing was it was also going back to that capital gains issue. And it's not that we're fighting, I would say it's more advocating.
We're fighting for capital gains, and you got to remember your 1031 exchange because they're trying to do
They
away
always
with that.
try to take the
And the
1031.
1031 exchange is used more by mom and pop. It's not used by the corporations and the big money people. It's used predominantly by mom and pops, and that's how they're able to create wealth and to keep it going. And I've got to go back to the lawsuit and the outcome. We have a form now that the buyers have to sign, and the buyers need to understand this. And please don't be afraid of signing this form. It's BRBC, the Buyer's Representation Broker Contract.
Mm-hmm.
Okay? Assembly Bill 2992 is going to make it mandatory that before a realtor can show you property, you have to sign this form.
So there's no more saying, I'm going to meet you at the house and you're going to show me it.
Well, I can meet you at the house, but before we go into that house, you've got to sign this agreement. So it's better that you have them send you the agreement, you go over it with them on the phone before you meet at the house, or you go to the office and go over that agreement and understand completely what you're doing. And it has to do with the compensation, because now the buyer is responsible for the buyer's agent compensation. But keep in mind, you still have the ability to negotiate, to ask the seller to pay the buyer's compensation for you. Are they going to pay it? Don't know. It's not 100%, but if you have a good agent, it's a strong
Yeah, because if
probability.
you have a good agent, they're going to go in and they're going to negotiate with the other side.
Because what's happening is because it's new, and if you're dealing with agents that don't completely understand, they don't understand how to explain the form, a lot of buyers are saying, oh, I don't want to sign it.
And the thing is, you don't have to sign the form for 8 months or 6 months or 5 months. You can sign the form for a short period. What the attorney once said to us in one of the classes, because we've been taking the BRBC classes constantly, because they're updating us and things are changing all the time, and we're not going to know for sure what it's going to be until it's actually in stone. And what they're saying is, you know what? Sign it for a short period. Maybe you want to go and look at a couple of homes and you think that you want to work with your best friend, or you think that whoever you want to work with, and you sign that BRBC for only 7 days, and you find out that your best friend who just got her real estate license doesn't know anything she's supposed to do, but you still want to give that commission to your best friend. Well, what if your best friend who doesn't know what to do gets you into a problem? And I'm not saying don't use your best friend, but if it's somebody who's brand new that needs help, make sure that they have a broker that's helping them, that has been following what's going on.
I think the bottom line is that whoever you choose to represent you, you have to feel
Confident.
comfortable with them, and you have to have sufficient confidence that you can treat them like a priest in confession. That you know that above everything, they're going to be looking out for your best interest. If you don't have that sense of comfort, then you need to be working with somebody else, even if it is your best friend, because you're going to be entering into a contract that's a major purchase, the biggest one that you're ever going to be looking at to buy.
And I know that in a couple of lawsuit cases where real estate agents, unfortunately, like we said, there's bad players everywhere. One of the agents was asked to explain a section in the contract, and the guy goes, "Yeah, I explained it to my buyer. I explained everything to my buyer," or it was his seller, whoever it was. But he said he had explained everything, and the judge says, "Okay, can you explain it to me how you explained it to your client?" And within about 20 minutes, less than 20 minutes, 2 seconds, the judge said, "If that's how you explained it, I obviously know that you obviously don't know the contracts." So when you're a brand new agent, you have to take contract classes. You have to take code of ethics classes. And what I always tell people is, if you're going to invest in property, work with a real estate agent that has done investments. If you're going to work with somebody if you want to flip homes, I hate to say don't use your best friend, but again, I had a doctor that was flipping homes with his daughter because his daughter was a brand new agent. He wanted to give her business. And all he did within, I want to say 4 or 5 minutes, when he told me what had gone down with his daughter and how she was representing him on a flip, because I had flipped homes before, I knew where I can save him money. And I said, in the last 3 minutes, I can show you right now where I could have saved you over $8,000. And, it's advocating and making sure that you're doing what's right for your client. And that's why we went to Washington, D.C., because we were going and talking to our senators. My dog's going to bark at the person who's walking in the door because my dog is a guard dog. But anyway, you have to make sure that you're working with somebody who knows what they're doing and who's advocating for you. What else it was interesting because when we were in Washington, D.C., I don't know about Mary.
When we were in Washington,
17,000 steps on my phone.
Averaging over 17,000 steps a day. Now keep in mind, 2,000 steps make a mile, so that gives you an idea of how far we were walking. But that meant we were walking to the Capitol, and we went into the Rayburn building, the Cannon building, and I can't remember the name of the third building, and that's for the House of Representatives. And then other people in our group were meeting with the senators. And it was all about, you had over 10,000 realtors from across the nation in there talking to their respective representatives, advocating for the issues that were primarily taking place in their state, as well as the issues that were covering the entire country. And for the most part, we were received warmly and kindly, and we got, nice, we understand, we hear you, and we're going to do what we can. We appreciate the representatives who were direct and honest, who said, you know what, we can't help you with this one because, and then they would give us the reason. And sometimes we would counter back, and sometimes we would just smile and say, okay, thank you. We get it.
We do what we can every time we can.
Exactly. Absolutely.
So, is there anything else you want to say about Washington or the NAR lawsuit or anything we can bring people up to date on? And what would you tell somebody who's buying a house right now? Should I wait for the interest rates or should I
No.
worry about the commission? What should I do?
What I tell anybody who comes to me and says, well, I'm going to wait for the interest rates, the only thing you accomplish waiting for the interest rates to come down is that house that you want to buy is going to cost a lot more money. I don't know if you guys were paying attention to the news this morning, but on Good Morning America and NBC, they were all talking about how the cost of houses in California for a medium home, that means a starter home, not a mansion, is at 900,000 plus.
Well, you know, the interesting thing, what's really great about going to Washington, D.C. is when they have these round tables. And the round table that I was a part of, which was amazing, was we went in and there was, I don't know how many agents from each state that were their local president or their local president-elect. And we all sat at a table, and the table I was at, the one guy was from Indiana, what is it? I guess that's it. Where Mary Tyler Moore's from. Where Mary Tyler Moore's from, Minneapolis. And he's like, you can buy a house in our area for $78,000. And, you know, they were saying the different amounts in the different states. And, you know, we talk about how expensive California is, like you said, but California's property tax base is 1.25%. So that's 1.25% of the purchase price. You divide that by 12, and that's how much you're going to pay per month. Now, you might have Mello-Roos, which is a whole nother story, which is an additional tax base that you have in some areas.
Too confusing.
Too confusing. However, when I looked at the guy from wherever it was, Minneapolis, and I said, well, you know, I'm going to come there and I'm going to buy me some houses if I can get them from between 78,000 and 100,000. And he says, well, our tax base, it was something like 4 or 5%. So, you know, you go around the country, and because everybody is there from different areas and you talk to them, you know, you've got to make a decision what you want. I mean, you're going to buy a less expensive property, but you're going to have higher property tax base. And then the other thing that we were fighting about, I'm not fighting, advocating about, were we talking to them about the fires and the insurance? Or was that was in Sacramento?
But you have an issue with insurance. So here's another tip. If you're a first-time home buyer and you're going to be looking to buy a house, the minute that you start looking is the minute that you start shopping for insurance. Because of the fires that we've had in California, because of the floods, a lot of your major insurance companies have pulled out and they're no longer working in California. And some insurance companies, they're not giving insurance coverage anymore. So you need to shop to find so that you're in a position to be able to get insurance. And it's not cheap. That's the other thing.
Well, the other thing,
you've had people that haven't been able to close their transactions because they weren't able to obtain insurance. So you need to shop for that ahead of time.
Well, at the same time, you should be well aware of where you're shopping too. Because if you're shopping in, you know, unfortunately, like my mom has a house in Yorba Linda that's right up to the Cleveland National Forest. And this year, her homeowner's insurance went from, I believe it was $1,700 a year, all the way up to, are you ready? $5,200. And so I said to the insurance guy, I said, my mom's thinking about renting out her home. You know, if we rent it out, is there going to be a change in the insurance? And he said, well, yeah, we probably can't do it, but let me see who could. And now we're back to mom and pop renter who, you know, they're property providers. They're trying to get properties out there for people. And he says to me, got back to me with a quote. The quote was $12,000. And, you know, how can she provide a property for somebody if she's got to pay $12,000 a year for fire insurance? And my insurance guy called me and he said the other day that one of the persons in Corona got a quote for $25,000 a year for fire insurance. And so, you know, as realtors in California, You know, we
Okay.
have our association's talking to the
Right.
insurance commissioner.
We're speaking to the insurance commissioner. We're trying to make changes. We don't want to scare the bejeebies out of you and make you think that everything is just so.
Just don't buy in a fire zone.
It's we're just trying to make you aware so that when you're shopping, when you're looking, you know what to expect, you know what to anticipate, and if it's not something that you like, then they can point you in a different direction. A realtor, a professional with experience, is going to disclose everything to you up front so that there's no surprises later. The last thing that you want to happen is that you found the house that you're just madly in love with and you've got everything coming together, and then at the end, right before your closing, you find out that you have to pay some astronomical fee because of the location of the property or because an issue of the property. Whatever it is, you want to know all that up front so that the disappointment is then and you don't have to pay for the moving vans that you can't use. But that's where the experience and the knowledge comes into play. And just because somebody's a brand new agent, you don't necessarily have to be afraid of them
Because they have a broker.
as long as the agent is up front with you and say, you know what, I don't know everything, but I'm going to work hard for you, and I have a good support people behind me. And sometimes you're going to see that agent with somebody else walking with them to show the property, to sitting right next to them to help them write up that contract, to make sure that you're protected and to make sure that everything's being done the right way. So you have to use your common sense, but I know.
Which common sense is not so common.
Correct. But go with your gut. But I can tell you, there's been a number of times where people have said to me, Mary, I'm choosing you because you're involved. Mary, I'm choosing you because of your experience and because of the information and knowledge that you have shared. And a lot of times you look at your agent. If your agent is putting you first, then that's a pretty good sign that they're going to be taking good care of you.
Exactly. And, you know.
And don't be afraid to go house shopping. Find out what you qualify for and buy.
Yeah, find out what you qualify for first. Once you know what you qualify for and you feel comfortable with the payments, you know, another person that you want to talk to, you know, Mary and I always talk about getting pre-approved and getting qualified. But the other thing is, I always talk to my clients about talking to their CPA, their tax person. If they don't have a tax person, talking to somebody who, you know, might, you know, go somewhere, get some consultation. Because a lot of people, I think a lot of the younger people, and this is something I have a pet peeve on, is they don't understand their W-9. Their W-9, when you guys go to work, a lot of people put zero dependents because the word dependent scares them from taking a dependent. So you put zero dependents, and what happens is it's all exciting because you're letting the government do what investors tell you to do, which is use other people's money. So the government's using your money while they're taking as much as they can out of your paycheck, and then when you do your taxes, you get some money back, and that's exciting. You're like, I'm going to get money back. But when you go to buy a home and you're told that you're qualified for a certain amount, you're like, yeah, I mean, I make $5,000 a month, but I only get, you know, $2,800 in my paycheck. Well, if you go and you talk to a good accountant, they can tell you, you know what, why don't you take two dependents? And now you get more money now instead of getting money later.
The accountant's going to sit down and talk to you and find out
what
your financial situation is. And they're going to say, well, based on what you're telling me, your tax liability is only going to be this much. So you can, or you're not going to have a tax liability.
Because you're going to own a home.
So you can claim 1, 2, 3 dependents. Okay, when you buy a home, you definitely need to talk to your tax preparer to find out how much you should put down for dependents, because that interest on that mortgage is a write-off.
And so are the property taxes.
And so are the property taxes, and so is the insurance. And so now all of a sudden you've just given yourself a raise because you're going to be bringing home more money. But that tax preparer is going to tell you what to do. So at the end, when you file your taxes, you should have not necessarily be getting a refund, but you shouldn't have to pay either.
Right. You might break even and you'll have a home that's doing what? Building you wealth.
Correct.
So if you're following us and we're talking about the different tax, liabilities and the benefits of owning a home, you'll also hear us talk about investment properties, because investment properties are another way that you're going to have tax deductions.
Correct.
But and Mary did mention this thing 1031 tax exchange and mom and pops. I don't know if it was in this video or the last video, but
it was in this one, but that was another thing that we advocated for because they were trying to get rid of that. They were trying to get rid of the mortgage interest that you were able to write off. They wanted to take that away. We fought really hard. We advocated for that. And I understand and appreciate that most people don't even know about this stuff that's going on. But we do.
Well, like my story in the last video where the guy said he was literally not going to sell his house. And when I told him about what I knew from being an advocate and from going and advocating for homeowners and knowing that we were able to get a law passed, he's like, oh my gosh, I didn't know that. Why didn't my agent know that? And I didn't want to say because your agent's not involved. I just said, you know what? I just know because I'm involved with our association.
Correct.
So, I mean, I hate to say just use an agent that's involved, but at least there's no reason not to be involved. And most agents don't even know what their association does for them.
You sit down and you talk to
interview your agent before you work with them.
You'll get a feel for it, whether you want to do it or not. I mean, there's certain things when you have existing homeowners that want to sell the property, they might have an investment property. First thing you ask them, okay, what are you going to do with the money when you sell it? And most people don't ask them that. I said, you realize you've got to talk to a tax person because you're going to have a capital gains. We can do a 1031 and then you won't have capital gains. And you explain to them, and again, I'm not a tax person. I'm going to refer you to a tax person, but that's the first thing that they should be doing is looking at that, because it's not how much money you make, it's how much money you keep.
Right.
You got to remember that.
Well, and I think it's sad when an agent, there's a lot of listing agents that only want to be listing agents. And that's great. You can be a listing agent, but at least direct them to talk to somebody before you sell their home. Because what if you sell their home and they're not even qualified to buy their home? I've had that happen where an agent that was a listing agent contacted me and said, usually I let you pre-approve my clients before they make the move, but I put their house on the market and it sold really fast. And I said, okay, let me talk to them. And I talked to them on the phone, and I'll never forget, the wife told me that her husband was self-employed and made $14,000 a month. And I did all the numbers over the phone. And so I went to their house and I said, okay, because he's self-employed, I need the tax returns and we'll see what I have a good idea what you're qualified for. And they wanted to buy something. They sold their house for right around $7,000 and they were looking for something for $850. And they weren't moving because they were moving because their street got too busy and they were worried about their kids. So I got there and the house was amazing. Their home was beautiful, but the street was really busy. And I sat down, I said, okay, let's look at your taxes. And I looked at him and I looked at her and I said, your husband doesn't make $14,000 a month. He writes off almost all of it. And because he's self-employed, we're looking at, he's maybe making $1,400 a month. So they didn't even qualify for their own house. And now it's already sold and they're in escrow. And now where are they going to go and what are they going to do? And I told them, I said, the only way you're going to qualify is if you sell that new car you got. And she goes, well, I'm not going to do that. And I said, okay, well, then I can't do your loan. And the interesting part is you also got to watch out for loan officers who promise stuff that, make sure you see it in writing and talk to them, because their loan, they decided, oh, we're going to go back to our loan officer that got us this house. And they went back to him, did not tell them they had to sell the car, did not go over everything with them. At the last 2 weeks of escrow, he told them they had to sell their car in order for them to qualify. And you don't want to put somebody at that. That's a horrible thing to do to somebody. To me, if you're thinking about selling, you need to sit down with somebody like Mary or myself that cares about you. And, not just Mary or myself, depending on where you're at in the country, you want to make sure that you're qualified to make the next move. Now, somebody like Mary or I would probably tell you, well, you know what? It's possible that you can keep this home and rent it out and buy another one. And there's been times where I could have had a listing, but I'd rather help them buy another home and keep that asset. And those kinds of questions are things that you want to ask myself or Mary, and you can put them in my comments and you could give us likes. And we're always going to bring you information when we go to Washington or Sacramento. We're going to be going to Boston in November?
I believe so.
And then in September, we're going somewhere, Long Beach. So whenever we go somewhere, I'm going to be interviewing Mary, but anytime you guys have a question or something you want to know about real estate, all you have to do is put in the comment. If it's something for Mary, I'll talk to her and we'll have her comment. And what else about Washington, D.C.? I think we should say something a little bit about the 1031 tax exchange, because we say 1031 tax exchange and you guys are probably biting at the bit going, what the hell is that?
Well, 1031 tax exchange, I'm an investor and I have a property that I bought, say, 5 years ago. And now I'm going to make a net profit of, say, $500,000. Well, I'm going to have to pay taxes on that 500,000
Capital gains.
because I just made 500,000. However, if I do a 1031 exchange, that means I'm telling the government that I'm not taking one penny of that 500,000. That entire $500,000 is going into another property, and it's supposed to be like the one that you just sold. So if it's 2 units, 4 units, 5 units, whatever, it needs to be more or less, it needs to be units. Okay, it doesn't have to be the exact same number of units, it just needs to be
Well, on the
residential.
legal documents, it
Okay.
says like kind for like kind.
Correct.
Now,
So,
honestly speaking, it's
well,
investment property for investment property.
exactly. So now all that money is being transferred, and it works the 1031 works in a certain way. You have to say I'm doing a 1031. You have so much time,
And you have an accommodator that does it for you, a 1031 accommodator.
and you don't touch the money at all. You don't get any money. If you're looking to get 50,000, 100,000 of that 500,000, it ain't gonna happen. That entire
There are ways around it too.
Well, don't be telling people how to break the law.
It's not breaking the law. There's ways. So I did a couple of 1031 tax
Okay, but we don't
exchanges.
want to tell them about that right
But
now.
they're
Okay,
legal. The ways to do it are
So
legal.
all that money is going to the other one. So you have to have a property picked out, an accommodator handles the whole thing, and you have to close escrow within a certain time frame. If you do not close escrow within that certain time frame, you will be liable for taxes.
But the point of the matter is, when they say 1031 tax exchange, it's really called a 1031 tax deferral. So you're not paying you're not paying on the capital gain now. You're deferring it to the next property. And yes, you cannot touch any money, but there's 2 legal ways to touch the money. The first legal way that's very easy to understand is it's called the boot, and it's on the California exam. And the boot is, let's say that you do want 50 grand. Well, then you do the 1031 tax exchange. The accommodator allows you to take that money, but that money is going to be taxed. So you're going to defer. Let's say that I'm going to get $450,000. Well, let's say that I go, God, I'd really like 50 of that to do this. Well, okay, if you want 50, the 400,000 that's going over there is deferred on the taxes, and the 50 grand that you're going to be getting, you get to pay capital gains on. So you're at least pushing down the gain that you would get. So it's not like you can't have it at all. That's called the boot, and that's on your state exam. And the other way, I did talk to a flipper who was using the 1031 tax exchange when he was flipping houses. And what he did was he bought the house for a low price. I thought this was ingenious, by the way. And the 1031 is really truly for the mom and pops. And when we say mom and pops, because we kept saying mom and pops throughout the day, mom and pops are people who, have 1 or 2 rental properties, and it's not in a corporation. They own it, they're taking care of it, or they have a property manager taking care of it.
Mom and pops are regular people.
Regular people like you and me who happen to have like I did. I bought my first condo, I kept it, and when I wanted to buy another property, I took the equity out. This is called actually pyramiding, by the way, and people want me to teach it all the time. You take the equity out of the first property, you leave that property there, but make sure you don't take out too much so the rent doesn't cover it. You rent that out, you take the equity, and you buy the next property. And then once that property gains equity, you take some equity out of that property, and you buy the next property. That's called pyramiding. And so most mom and pops will have their first home that's really small, and then they'll have the home that they purchased for their family. Now, I wish I would have thought ahead when I bought my first property, because I was 18 years old when I bought it, and I didn't think about the stairs. And so now, if I decide to downsize, I could rent this house out and then go and live in the first condo. But I wasn't bright enough because I was just young and dumb, and I bought whatever I could. Because the other thing is don't be so picky about saying to yourself, well, I can't afford the property I want, so I'm not going to buy anything. Well, that's, I hate to say, not the best choice, because I was in escrow for a beautiful brand new condo. You know the Placentia Lakes? I watched the Placentia Lakes be built. I was in escrow, and then interest rates went to 18%, and I didn't qualify. So we qualified for 58,000. My husband or fiance at the time said, let's just get what we can get. And I'm glad we did, because we bought that little property for 58 grand. It's now worth about 450. But when it was worth 150, I took equity out. We bought the next home and the next home and the next home. And people go, well, can you teach us a class on that? Absolutely. You just have to ask me what you want me to teach and what you want to see on the videos, and we'll do it. But the point of the matter is, if you don't start now, you're never going to start. And, you know, if you wait till August the 13th, you're going to be paying for your own commission, or you're going to have to get your agent who knows how to negotiate that commission with you. And, you know, with the 1031 that I was going to say about the flipper, what he did was he bought a property, because you have to have it for a certain time too on the 1031 tax exchange. He bought it, he fixed it up, he lived in it for a short period of time, then he rented it out. And when he rented it out, he let them know I was only going to rent for a short-term rental, and he rented it out for 2 years is what he did. And then he refinanced it, took the cash out, because he didn't take the cash during the 1031 tax exchange. He refinanced it, took the cash out, had the renters in it, and then he did a 1031 tax exchange, and he had some money in his hand, and he moved the money to the next property. So there's different things you can do, but you definitely want to talk to an attorney or somebody who's a 1031 tax accommodator, because there's so much out there that people don't know that they don't know. And if you work with a real estate agent that doesn't know what they don't know, then you're not going to know what you should know, right?
Correct. They're not going to be able to provide you with, you know, the little tidbits, the little information, or direct you to the professionals that will know.
And they've been trying to take, you know, every so often you hear they're going to try to take the 1031 tax again. This is a federal issue, right? They're going to take the 1031 tax exchange away. Then us realtors go out there and we show up with 10,000 of us.
We fought really hard to get them to understand that that would be detrimental to the economy, and it would hurt, you know, the little guy. It would hurt us the most. It's not going to do anything to the big money, because they don't use it, but it's mom and pop. That's how they build wealth, and that's how they get to grow and get bigger. Because it's not just, the 1031 is not just used on, you know, residential property, it's also used on commercial property as well.
Well, one of the things I don't know if you want to talk about it now or in our next video about the meeting that we were at today, but what's happening with the lawsuit on being approved and not approved, and how it's going to affect the buyers.
I think we should wait.
Yeah, we're going to wait till the next video, you guys. So we're going to break now, and we're going to bring you another video on the meetings that we go to. And thank you so much for following us and watching us. Like we say, if you have any real estate questions, you're getting it from, I hate to say the horse's mouth, but we go to the meetings and we're there listening to the attorneys. We are not attorneys, and we are only speaking for ourselves.
Correct. So let's chat real estate.
Let's chat real estate. Anytime you see Chat with Mary, this is what it's going to be. Thank you for following us, and we'll see you on the next video. Didn't work.